See, so that's why ATC they criticize the president for the Rivers Emergency Law. Say that
Okay, good morning, everybody. Sorry for the little bit of delay, in starting this program this morning. The voice you are hearing is that of Olusegun, the regular anchor, um, market review. This is what we do Mondays, Tuesdays, Wednesdays, Thursdays, and Fridays, 8 o'clock in the morning, Nigeria time. And what we discuss basically is the, training, education, okay, and of course, market insights as to what goes on in the financial market, so that, of course, we can teach ourselves, how to trade, and of course, give ourselves idea of how price move on the charts. Now, like I said, this is 100% education, um, program. So, which means that this is for educational purpose only. It doesn't serve as a financial advice. It doesn't serve as any other thing rather than for us to learn and understand the price movement in the market, and of course, expectations and that's the way we expect the price to move in the market. And of course, we hope that it will benefit someone, it will lift someone's spirit, it will, give someone's hope on what to do and how to do it in the global financial market. Now, I've seen quite a number of people here. I've been here since 8 o'clock as well. I was just waiting to start. Okay, so for those people that are here now, you're welcome. Early callers, you're welcome. All right, so I'm going to be starting now, and of course, I'll share my screen so that we can all see it. And let me use possibly I may want to use MT5 this morning. Give me a second. Let me see if we can log into my MT5 account. A second. Let me check. Control. Okay. Well, don't think I'm going to that account now. I don't think so. I actually forgot that my laptop crashed, so the laptop I'm using now is not that updated for me to be able to use MT5. So I'm going to switch straight to MT4. Of course, we can see what we can do with the market and how market moves and how it will benefit us. So let me go straight to share my screen with you guys so that you can see what I'm doing and how I'm doing it. Why don't I expand this, close this, and share? Okay, so I'm going to share this. Okay, so this is my MT4 screen. Now, if you have been following me, before now, you would have seen that I have these lines drawn on AUD/USD. And of course, like I predicted, the price actually turned around here for this particular one. Okay, so where I expect the price to stop now is going to be on this line, on this middle line. That's as the price is moving down now, where to most likely stop is going to be on this line. Okay, especially the first one. So if it's going to stop again, it will stop on the second line. And if it's going to stop again, it will stop on the third line. So this price is most likely going to be moving on this band. Okay, and of course, I still expect AUD to continue to be strengthening against dollar. That means I'm starting with AUD/USD this morning. So please take note of that. All right, everybody, take note of that. So I expect AUD/USD to retrace back to this middle line. I have about 5 lines on this screen. So the particularly middle line is one I expect the price to get to. And then it should bounce and move back to the second to the last up, and so on and so forth. So that should be the way the price should be moving on this chart. But of course, if it fails here, it should land on the second one. And if it fails on that one, it should land on the third one. So it shouldn't actually exceed that, but it goes to where it's supposed to go. As far as AUD/USD is concerned, that's the way I see it. Now, gold has been, terribly bullish in recent time. I expect gold. I was actually discussing this with one of our, senior market strategists on Friday. Not even before Friday. I told him I expect price of gold to enter $4,000, dollar per ounce. So it's already on 3,700, and of course, the way it is moving now, it should, get to 4,000 in a short while. So if I'm going to be trading gold, I'm going to be bullish. As simple as that. So whatever you want to do on gold, that's the way I see it. That's the way the market, is pointing at it. Should be 100% looking to hit 4,000, dollar per ounce. But before we begin to think, in the direction of bulls, let's look at something that is critical. So gold broke here on D1, right? So it broke this range of 3,447 on D1, but it didn't retest it, all right? Normally, when a price breaks like that, for it to, last long, for it to go particularly bullish and continue to go forever, and never, it should actually retest. But we have not seen that on D1, right? Matter of fact, we have not seen it on H4. Okay, the price has not retested the resistance on H4. But the thing is this, the thing with breakout is that even though we say it has not retested, the price has been tested, on the bottom side, not on the top side. What I mean by on the bottom side is if I look at the way the price moved, you see that the price has actually touched here, in the time past, touched here in the time past, maybe I can just make this arrow a little bit big, right? Let's see this size. Okay, so it has actually tested these regions in recent past, attempted these regions in recent past, and then there was a breakout. Now, as far as this is concerned, here I can go remove this and copy this guy to this side so that we can. So, what I'm trying to say is that from the bottom side, we have seen it attempted to break out. But then now there's a clear breakout. Now, this breakout, as we see it, as we know breakouts to be, should actually give us a retest. A retest in the sense that we should have, let me put an arrow down, something like this. Okay. I will do as if the price wanted to go down. After a clear breakout. But that's the way we see it on D1. Okay. But as far as we are concerned now, looking at what we see, there's a clear breakout that is not even, giving us any room for a retest. Okay, and of course on the W1 as well, we have seen it. There's no room for a retest. Matter of fact, whatever we see on W1 is actually more of a Marubuzu, which means that the trend is going to continue in that direction. But this is September, and of course we need to watch it. September is almost ending. We're already on 22nd of the month, and the candle on the W1 is short. Okay, so compared to 4 weeks ago, when this move begins to happen, we see a very solid big candle. Maybe I can just remove this arrow to show you what I mean on that. Let me use this arrow to, sorry, Control Z, Control this. What I mean is on this W1, let me just remove this arrow. And I don't know why that particular arrow is not clicking. Okay, so let me use this one. And I don't know if I can paint this. It's not giving me that arrow. Okay, let's use this one. You see this candle here, this particular one now. Why am I not able to click on that arrow? Let me remove it. Let me also remove it. Let me also remove it. Let me also remove it. Now, looking at the particular arrow here, this particular one, okay, pointing to this particular candle, you see that the particular candle I'm pointing to now is kind of big, right? Okay, I hope you can hear me. Okay, I hope so. Now, because the candle body is big compared to the one that follow it is shorter, compared to the one that follow it is shorter, compared to the one that follow it is actually getting shorter. So which means that the momentum is getting slower, okay? But the price has not hit 4,000 yet. So it means that this price can actually still retest this particular, 3443, which means that the price of gold can still get back to 3443 or between 3443 and 3447. Okay? I think the resistance is actually around 3447. Let's see if we can make this guy 3447. Right. So that's where the resistance is, all right, 3447. So the price of this gold can still get back to 3447, all right? Okay, so or if it then get back to 3447 and trade lower, it means that the price of gold can still crash. But based on what we can see here, even though on the weekly chart this thing is getting shorter, on the monthly chart, let's look at what the candle looks like. It's still a single candle, especially in this September, that has been very, very bullish, all right? So it could be that what we see here is going to repeat on monthly chart. What do I mean? Now, on the weekly chart, we see a particular candle, this particular one, right? Okay, that is very bullish. But on the weekly chart, on the monthly chart, we're only seeing one, at least. So far, so good. So we're only seeing one here, right? So it means that as far as this weekly is concerned, We have seen a solid one that is kind of bullish. So then we see a shorter one, a shorter one, a shorter one. So this that on the monthly chart as well, it is possible that we actually see another candle, which will be candle of October, that will still be bullish and higher than the one in September, but it could be shorter, right? And then before you know it, it will not be that the price will do what it's supposed to do, which is retrace. Okay, but the thing is this: no particular market force have control over price all over the world, and continuously, which means that the bulls are having their day right now. The bears will come in, right? The bulls are actually having their day, okay, feel they enjoying the momentum and all that. The bears will still creeping, and by the time the bears creeping, bears can be very, very wicked as well, right? Even though the bulls are strong, the bears can also be as strong as anything you can think of, which means that if you are still trading gold now, if you're on a sell, you are wrong. If you're on a buy, you are good until the price turns. So, but we are not seeing it coming. At least we have not seen it. Even on W1, we have not seen it. All right. No indicator is actually working on as far as this one is concerned now. Indicators are kind of useless right now. Okay. Before now, on the 1 hour chart, the price of anything, whether it's gold or anything, normally respect Bollinger Band. But this particular gold has refused to respect Bollinger Band as we see it. All right. And of course, as we also refuse to respect, the moving average, okay, as we see it. Because on the H4, yeah, it respects, on the H4. I was actually looking at it last week. What the price does here is that it's as simple as this. After this breakout right here and it retest, the next thing we saw is that it actually still came back and do the same. So does it mean that the price has found support on 4 hours? The answer is yes. All right. So we expect the price to still be bullish until cancel. All right. Or the one we call goody cancel. So as far as this gold is concerned, my bias stay on the buy. So if I'm going to be trading gold, I'm going to be on the bullish side. Now, where do we come in? That's if you want to trade now. How do you come in? So if I'm to trade gold, I'm going to be putting either this moving average strategy, okay, which is currently telling me that I can buy on 4 hours or on 15 minutes. All right, on the 15 minutes front, I'm going to be waiting for the price to do something like this. All right, something like a cross right here, and then I'll buy. But right now, the price is opened. Okay, so I'm not going to be trading now. That's if I'm the one that will trade it. I'll pause a little bit until there's another cross, and of course it will happen. So I normally trade around crosses. Okay, I would have traded around this zone, right? And of course, I would have traded around. But note that I would have only be trading a buy, all right? I would not be trading a sell. So I'll only be trading a buy when there's a cross above, right? I would have been traded around this zone, crossing above. Okay, that's if the breakout is complete, like right here, which I didn't see it, like so on this particular one. Okay, this one did not clearly break out, so it's not ideal. Okay, but these ones would have been okay. All right, this would have been even this one is not even okay. Okay, let me show you the one that would have been very good, like this one, right? It would have been very good around here. It would have been very good. So those are the areas I would have traded it by, right? Like all these areas and all these areas, I would have traded it by. So right now, I'm going to be waiting for another cross of 15 minutes. Then I'll be trading bullish. Now, if you have a question of this particular one, you can ask, but that's the way I would have traded, right? So let's say I'm going to say D40. It's been bullish over time. Sorry, it's been bearish over time. Rather. So let me quickly go to here and then EMA trend black. I'm going to go to claim candle, and then this is D40 daily. It's been narrowly bearish. When I say narrowly bearish, that means the bears are not 100% that ferocious. Okay, they're just marginally trading, and of course it's trading lower on the D1. So the way I see it, the price of this particular instrument on the D1 has been phenomenally bullish over the years. When I say over the years, we can see since 2015, the trend has been nothing but up. Okay, the up. All right, as simple as that. So it's a bullish, trend so far, so good. And of course, if you want to be trading, you could be trading with the bulls when the price gives you the opportunity. So if I'm going to be trading this one also, I could be using this one to trade, okay? But as far as this one is concerned, there's no signal, all right, for me to trade it buy. So right now the price is down. Okay, that means the trend is down. That means you shouldn't be on a trade. You shouldn't be on a buy. Okay, of course, there's no signal for buy yet. And of course, we can also use the breakout strategy. Right now it is a breakout for sellers, all right, not the buyers, which means that you have to wait for your turn if you want to go bullish on this. Of course, but if you want to go bearish, because it's still trading marginally lower, at least you would have traded a sell earlier on today. Maybe around here you would have traded a sell, but right now it's not a good time for you to join. Okay, even though everything points to bear or points to the price dropping like massively. So that's the way I see D40 this morning. USDCHF. Surprisingly, before I go to USDCHF, I normally like to talk about Euro USD. All right. Euro USD has been bullish over time, right? But in the last 3 trading days, it's been bearish. That's Thursday, Wednesday, Thursday, Friday. It's been bearish. All right. So that's looking at the D1. All right. So, but of course, I could use this white one so that it can be clear for all of us to see. This is D1. D1, that means daily bar. So we see the last 3 candles or the last 3 days of Euro USD being bearish. Okay, so it doesn't mean that the bears have actually are done with price, okay, in their own direction. Let's find out with this particular one. Okay, so I'm going to go to H4 and check. Okay, with H4, what we see here is that the price actually broke that support. Of course, the price has been, it's not as if this is not strange for hours, because we saw this particular trend around here. The price broke below that line. Of course, it still managed to climb above it. Price broke below the line, still managed to crawl above it. And of course, we also saw it around here. That price actually traded below the line and still managed to cross above it. So based on what we see here, and because Euro USD is still bullish, so I want to believe that what the price has done before is what it's doing now. So I would rather, join the bulls right now and be trading, with the bulls on Euro USD or with Euro USD. That said, I could go to my click candle and look closely at 15 minutes chart and go ahead with this one and check. So with this one, I'll be going with the bulls. All right. If I'm going to be trading Euro USD this morning, I'm going to be going with the bulls. So I could actually do instant execution like right now. And of course, you could do anything you want to do. So that's the way I'm going to be trading Euro USD. I'm going to be going with the bulls this morning on Euro USD. I'm not going to be going with the bears because the trend is still 100% solid to the upside. All right. 100% solid to the upside. So I'm going to be going with the bulls on Euro USD this morning. Okay, that's where I'm going to be trading it. Right, looking at the 15 minutes chart, I think it's going to be okay for me to trade with the bulls. All right, so if it is let me see if I can just go now to USDCHF. Okay, so for USDCHF, I'm going to also do something like first of all this one, and then I'll go to D1 to check the trend. Okay, so the trend is still down on this one as well. And of course, if I go with the H1, it could be something like the price is, still doing what it's supposed to do. And of course, on the 1 hour, we are now seeing at least 3 black candles. Okay, so it means that the trend could actually be turning in favor of the bears. But of course, if I'm to trade USDCHF, I'll be trading a sell. That's where I see it. If I'm to trade USDCHF this morning, I'll trade with the bears, all right? But I'm not going to be trading it. Okay, I'll just stay off because I don't have to trade all trades. Okay, but let's just assume that I'm going to be placing a trade on USDCHF. Should have been a sell this morning, right? So let me check the comment section to see what people are saying. All right. Somebody says he's just joining the class. His name is Femi Ayola, and he says I should look at US30. We'll look at it if we have the time. Let's look at USDJPY. USDJPY suggests also that the price could be dropping, but let's look at the 15-minute chart. Well, let's first of all go with this one. This one is also suggesting that the price could be dropping this morning. Okay, but I'm okay with my trade on Euro USD, so I could pass for this one. But the price actually suggests is sell. Okay, that's what it suggests. So if I'm to trade USD JPY this morning, I would have traded a sell. All right. So because the price looks like something that can drop off the chart. And then let's look at crude oil. Crude oil suggests, that the price is still around $67 right now. That's what we can see on the chart. And the price has been volatile over time. So based on the geopolitical tensions around the Middle East, one would expect that the price of crude oil should be flying at above $100 right now. But because it is not so, because the advent of electric cars, in China, and of course the price of gold, going bullish because people are actually dumping dollars right now. So gold is more favored than dollars. All right. So it will mean that price of crude oil may not actually be that interesting. Okay, it may not be attractive. But be that as it may, you will still be trading crude oil right now. That means when I say it's not attractive, is that it means that the price may not be bullish. All right, the price may not be foolish because a lot of people are moving to green energy right now. Okay, that's green renewable energy, solar, electric cars. That's what people are moving to. Except your country, Nigeria, people still believe that petrol should be, the one we should be putting in our car. But the trend is actually shifting because a filling station in Lagos where I normally buy fuel, an NNPC filling station, is being converted right now to electric car, sorry, CNG station, not electric car yet. Okay, so it means that the people are actually thinking, not to actually buy crude as we move on. Okay, so we are moving to gas, we are moving to not even, CNG is what is beginning to reign in Nigeria, right? It's beginning to pop up. In fact, it's not as if it's prevalent. Okay, petrol is still prevalent. Okay, but people have moved away from CNG like since, in countries like, United Arab Emirates, in countries like, China, they have already moved away from CNG. They are already on electric cars, all right, on solar. That's what people are in. But Nigeria is just trying to see if you can even crawl into into CNG. Okay, so based on what I see, and of course, it's only in Nigeria that you see crude oil price or petrol price attractive. Okay, interesting and of course expensive. Elsewhere, it is 100% zero. Nobody uses the game. So I don't think crude oil will be that attractive enough to enter like $70, $100, $120, like it used to be during Jonathan regime. All right. But our country and economy depends on it. So let's hope that the price will be stable at between $60 and maybe $70, $80. So move on. But as far as this chart is concerned, you may want to look at the D1, okay, and look at the way the price is doing. So based on what the price is doing on D1, the price is flat. It is not trending, it's not going up and it's not going down. So because it is so on D1 and H4, you could now go to maybe M15 and be doing something like I don't know. I don't know what you can do on this. Really, it's kind of confusing, right? So if I'm to trade crude oil, I could actually pass. I could say I'm not interested, okay, because the price is not really trending to the extent that I can say, oh, I'm jumping in. But if you must trade, you could actually, maybe look in the direction of, the buyers. Why I say that is because based on the price, based on the fact that the price is trending narrowly, in the sense that if I do this, okay, I could actually, maybe I could do this. Uh, let me see if I can just do this one and then extend this to the upside. Okay. So based on what we are seeing now, this price could just, it could favor buyers, all right? Because you can see the way I just, put two trend lines on this chart, suggesting that the price could be on this band, all right? Not necessarily flat, but narrowly, or marginally, trending to the upside. But you could actually look in the direction of buyers if you must trade this morning. That's if I'm to trade, all right? I could actually look in that direction. But like I said, I'm going to be passing for this one. I will not trade it. You look at, well, on Friday, we saw it bearish. on Friday. In fact, matter of fact, it's on Wednesday, Thursday, Friday. But this trend is still intact and is still on the upside. So you might want to be looking to trade with the bulls, all right, on the EuroCAD. Okay, if I'm to trade EuroCAD, I'll be trading with the bulls. All right, so that means I'll be looking to buy from the EuroCAD. So if you're interested in that one, you could be looking in that direction because the trend says so, the D1 suggests so, the H4 suggests that the price could still be trending to the upside. Okay, the price has reached support on H4 already. You may want to check that with this on H4. All right, you can see that the price actually is trending a little bit below that dynamic support. Okay, broken. Now the price is approaching the ticket. So you want to look in that direction. And if you look at this H4 closely, you will see that there are some candles here that looks like something that could be interesting. All right, two bulls inside of two bulls, right? This is kind of interesting. I'm actually seeing this for nothing surprises me anyway of candlestick. Nothing. I've seen it all right? But this is actually surprising. Okay, so and of course it actually means that this price could actually still go bullish as far as we're concerned. I'm going to be putting an arrow on this candle. 1, 2, especially these two. So you can see that they look alike, and of course they capture two bulls. All right, so this suggests that the price of EuroCAD will still be strongly bullish. All right, so if I'm going to be trading EuroCAD, I'm going to be looking to buy 100%, not sell. All right, so on the 15 minutes chart, you will be looking to do that either with breakout or anything you want. This is breakout, and of course, if I'm to trade, I would have traded it by maybe from here. I actually missed it. Okay, missed that. So so this is still 100% good to buy. So let me just wait around here for a buy. That's the way I see it on EuroCAD. On USD card, and before I go to USD card, let me look at what Olanwano has to say. So I should look at US 100. Hopefully we'll look at it. USD card. 4 hours. Please, I'm in a class. All right. So my USD card is still what it is. A little bit bullish on 4 hours. Okay. But like the crude oil counterpart, okay, it is still trading narrowly. We can't say bullish because we can't say bearish really. But let's put in a trend line to check what the price is saying. So if we do this as the lower trend line, and actually copy it and put it somewhere here as the upper trend line. Somewhere here, right? Somewhere here as the upper trend line. So we switch to 1 hour and check what the price is doing. So it means that this price can still get to this. Now, crude oil is not that attractive, but one of the reasons why this. So I don't know. So I think I could still go with buyers of the USD card. I could still do that. Okay. I don't think it's as attractive as to sell as the USD CHF or USD right fat. Okay, so if you want to trade this, you might want to go with the bull, right? So you want to do that, or you might want to, consider the resistance we are seeing now. Okay, and maybe inside of that trend line, we still have this one. We have this one. Okay, so the way I see it, USD card will still be good to buy, right? So that if you're trading that one, you can look at it. And of course, I already talked about EUD USD and of course Euro USD. So let's now go to what people ask us to look at. Of course, the first one I'm going to be looking at is going to be US 100, US 30, and then US 30. So for US 100, it's bullish. The way I see it, it's bullish. But right now, it's beginning to look like something that could drop, right? No, let me use Bollinger Band for this one. Okay, so there's a gap that needs to be covered from this US 100. So the price will still get there. So if you're interested in trading this one now, you'll be looking at maybe short selling until it gets to that level and then you can begin to pick it to the upside. All right. So give me a minute. Let me just do something.
All right, good morning, everybody. So I'll be taking over from I'll take over from my boss right away. Currently, he's indisposed now, has some things to attend to. So let's take over from here now. So looking at US 100 the same way, just like, okay, so from my own point of view, like we all know, in terms of US 100, one of the things that I have noticed about this particular instrument is more of a bullish trend. If you look at it from the higher time frame, you discover that the market is always going on and having a pullback a little, you understand? So on this particular instrument, you're saying US 100, this morning you can see that it has gone up to a high, and now it's pulling back. So what I would just expect based on what we're seeing on this moving average is either it gets reverses back from this point, or is able to break below this point. This particular section that has been shaded out for us is a strong zone for a buy, you understand? So you might decide to just look at this zone, this area of risk, you understand? So look out for a buying position around this session, you understand? So if price is able to get into this point, from this point, it's going, for me, it's a sure buy. It's going to be bullish from that particular direction, okay? So well, that's based on my own opinion anyway. So let's look at US 30. US 30. Let's look at US 30. Okay. So this is US 30 now. Looking at US 30 from this particular trend, you also look at it that, okay, fine. This market is still pushing to the upside. If you're looking at it based on what we're seeing on candlestick, looking at it from the higher time frame, this is my D1 now. And if you look at it on daily time frame, you see price has been pushing up on US 30, giving us more of higher high, higher low, higher high, higher low. And as of this morning, because of where it is, we should expect a pullback. Yes, we are expecting a pullback based on what we're saying now. And yes, there's a gap around this point that I feel price is supposed to fill. Now, you see, this particular section is the zone. So if price is able to break below this part, I expect it to fill it down to this point. Expect it to fill it down to this point. So around this point, I feel this is our bullish zone. The price able to fill this part, break below this part, fill it, then this zone here, this gap, because there's a gap here, you understand? You can see it very well, there's a gap around this point. So the price able to go down below this section and fill up this gap, then we should expect price to get bullish from this point. So for me, I'm expecting a bullish price from this point. But if price should respect this zone, we could have price still ranging, like you're saying, if price is just ranging between these two zones now, from this point to this point. Okay, let me pull it out. Just okay, so from this point to this point, instead of saying price being tight, you understand, you can see it is just ranging between these two zones. So yes, we can have price breaking below this point and coming down. All right, Magdalene Amos, I can see you raising your hands. Okay. Kindly speak out, unmute yourself and speak. Let me hear you. I'm with you, Magdalene Amos. I'm with you. Yes, I'm expecting you. Unmute yourself, please. All right, I think I'm unable to hear you, Magdalene Amos. So I will kindly advise, since you I can't hear you now, maybe what you do is to drop it as a chart for me. Drop it as a chart for me. Drop it as a chart for me so I look at it. Yes. drop it as a chart for me so I look at it. Then I'll read it once I see it. I'll read it, then I'll attend to the issue on Brown. All right, so I can see Brown Akinola, you're saying GBP USD. So let's look at GBP USD. Let's see what is happening on GBP USD. Let's look at GBP USD. GBP USD. I'm on it. I'm on that instrument. Okay. Stay with us. Okay, so GBP USD now on my 1 hour time frame. Okay, so looking at it from the higher time frame, we discover that price has gone up for a while, and now it's more or less like it's moving sideways between these 2 points. This is on my daily time frame anyway. One of the reasons why you see me going to the daily time frame is to see the trend of the market. You know, on the daily time frame, it helps you to see the structure, the direction of the market, and know if the market is beginning to change direction. You understand? And once you're able to get that pull or the information that the market is beginning to change direction, you know the next trade to place. You understand? So currently now, we discover that the market has gone up for a while now. It's been moving between these 2 points. So one of these two is expected. Either it breaks above or reverses down and breaks back, does the reversal back to the downside on this particular market. So looking at it from my 1 hour time frame now, on 1 hour time frame, we discover that market price is pulling back down. And yes, for me, I feel, based on my own opinion, I feel dollars is still weak. So we should still expect that price will push back to the upside on GBP USD. You understand, right? I'm expecting price to still push back to the upside based on that, and we can see it. Price got rejected around this point, so price is pushing back up. There's a zone around this point. Okay, so there's a zone here which is expected for price to break. So if price is able to break above this section successfully, then we should expect price to push back to the upside successfully. But if that does not happen, we could see price continue the bearish movement. You understand? And based on what we're seeing on daily time frame, if it continues that bearish movement, it could get down to this point, okay, to this particular zone. But I'm expecting price to push up on GBP USD. I'm expecting it to push upward. Okay, so let's see some lower time frames and see what is happening there. So look at it. Even on the lower time frame of 15 minutes time frame, you can see that price around this point of 15 minutes time frame is looking like price is ranging, is moving sideways. And like we all know, when price begins to move sideways, it's a correction zone. We expect it to pick a direction, a definite direction. So whichever direction it breaks out to, either to the upside or downside, that's what we should follow, because that's where price is going. Okay, so that's that on GBP USD. GBP USD. Okay, all right, I'm seeing some of, okay, Mr. Shomogun, you're saying we should look at GBP JPY. All right, so let's look at GBP JPY. Let's look at GBP JPY now. Let's look at GBP JPY and see what is happening on GBP JPY. GBP JPY. All right. GBP JPY, based on what we're seeing, let's look at it on the all right. So based on what we're seeing, daily time frame, GBP JPY, you discover that price has actually been moving up. Price has been moving up for a while now, and it's still pushing up. This is just more of a pullback. I'm still expecting GBP to be strong, but yes, for a while, JPY has been weak. And that's why we're seeing the price of GBP pushing up. GBP has actually been strong now for a while, but let's look at what it's going to be like technically on the chart. Let's see what is happening on the chart. So this is on 15 minutes time frame. I think around last week, close to the ending, okay, coming. So based on what we are seeing, the market opened and gapped down, but we can see that it has filled that position back. So I'm expecting price to get rejected around this point. If price is able to push down So this is on my 15 minutes time frame. I'm expecting price to get bullish around this point. This point we're seeing, I'm expecting price to get bullish. So if price should push down into this zone, I'm expecting a bullish market. I'm expecting the GBP JPY to push up. So yes, this might just be a minor pullback to this point. Then around this point, price to reject back to the upside. So based on my own opinion, I'm expecting a bullish move on GBP JPY. I'm expecting a bullish move on GBP JPY. That's my own opinion on GBP JPY. Okay. All right. Mr. Adeyemi Olalekan, you're saying we should look at wheat and US 2000. So let's look at wheat, then we'll look at US 2000 at the same time. Let's do that one after the other. So we'll start with wheat. Let's look at wheat. Let's look at wheat. Okay. So based on what we're seeing, this is wheat, and price of wheat is coming down even on 1 hour time frame. You can see the move, and yes, it is expected. In fact, I'm expecting it based on what we're seeing on daily time frame. Look at this gap has been for a long time. This is on daily time frame anyway. So I'll still expect price of wheat to drop. I'm still expecting the price of wheat to drop. Okay, but where it is now is currently a zone. It's currently a zone. So if the price is able to break below this part successfully, we can still go bearish with it. Price, I'm expecting it to get down to this point. This point is a strong point, and price able to break it is still expected to go down further. So on wheat, I'll prefer my bias for wheat is bearish. I'm expecting price of wheat to go bearish. So around this zone, we could expect another kind of move from this point. Yes, we could expect a bullish move from this point. You understand? But as of this morning, I'm expecting a bearish move down to this point on wheat. I'm expecting price to push down to this point on wheat. So I'll prefer to go bearish on wheat. Okay, so that's my bias. Then let's look at US 2000. Let's look at what is happening on US 2000. US 2000, with us. US 2000. Okay, so US 2000, I'm on that particular chart now. So on US 2000, based on what we are seeing, let's look at it. Well, from my own opinion, when you look at all the index instruments, US 100, US 30, US 500, US 2000, they are more bullish instruments. And based on the hints I've given to us in time past, I'll just advise one of the things we need to understand in trading this market technically to make it very, very simple for us to understand. I always advise we go to the higher time frame, know the trend of the market. Some of these instruments tilt towards a particular direction more than the other. So whichever instrument you're looking at, know the direction that this instrument moves towards more. You understand? Like for instance, now we're looking at US 2000 on the daily time frame. If we zoom it out, you discover that for a long time, price has been going up. It's more of a bullish instrument. So what do you intend to do? In situations like this, best is what? Look out for a buying position. And how do you do that? Once you know the direction of the market, you can come to your lower time frame and look out for the best opportunity to enter that buy or sell. And based on what we're seeing as of this morning, whenever price is getting to a new high, one of the things you need to look out for is what? Be careful. If it's of the bullish move, be careful, because there's a possibility that price want to do a pullback. So in situations like that, once you discover that price has gone to a new high, you hold on for it to do a pullback, then you can join in whichever direction it's going. You understand? So based on what we're seeing now, this is on US 2000. You discover that price has gone up for a while. In days, it has been going up, and it has gone into that new high, and price is pulling back. So because of that, as of this moment, I feel, based on my own opinion, there's a gap around this point here, and price might want to come back to fill it. Yes, price might want to come back to fill it. So this particular zone you're seeing here is a strong zone. So once price is able to fill this point successfully, in fact, looking at it from where it started from this point, and it gapped up. So looking at it from where it is, we could expect price to pull back to this point. And once price gets to this point, this is our strong zone, our area of risk. You understand? This is where I will expect us to go bullish. I expect us to go bullish around this point and push to the upside. So you should expect price to buy around this point. This is our strong area of risk. This is where I expect us to push up to go for that bullish move. But around this point, yes, I'm expecting price to drop. That's my own take on US 2000. Okay. All right. So I think, Mr. Adeyemi, I'm done with your own choice, wheat and US 2000. Okay. All right. So all right. So still with us. Let's see another instrument. Okay. You want to know the moving average using. All right. So one is 50, the other one is it depends. One is 50 here, this other one is 150. You understand? The main thing is for you to know how to use it, to understand how to use it. Once you understand the motive behind it, there's nothing hard behind using all this. But okay, so this is one here, this is one here, and this one you're seeing here is 50. Is 50 based on what you're seeing on this moving average. And if you are to look at this moving average based on what we are seeing on this 1 hour time frame, can you see price is really coming down? And based on it, price is about to close below the moving average. So if it closes below this moving average, that's also a good sign that price wants to drop on US 2000. And I'm expecting it, just like I said, to drop down to around this point that has been marked out. And if it's able to drop to that point, that particular section should be our area of risk. That's the bullish point where we can go bullish on this particular market. Okay, so that's that. All right. All right. Ali Bode said, yes, you picked GBP JPY, and I think I talked about that. I've done GBP JPY. So all right, so let me just do a recap of some of these instruments. Okay, I see for some of us we're seeing gold and men, and it's been talked about. So based on what we are saying, even on gold, this is gold. So this is what we are seeing on gold. Based on all these areas, I expect that gold will still push up. So we can have a minor pullback to this point, then a reversal back to the upside, as just it. Okay. All right. USD JPY, that has also been talked about. That has been talked about too. Let's see. So based on what we are seeing on USD JPY now, that is from the higher time frame. So on the higher time frame, can you see? Price has been moving up, but slowly. In fact, price is moving up slowly and quietly, but around where it is as of this moment, this is on daily time frame, it's more or less like it's ranging. It's ranging between these two zones on the daily time frame. This is one point, and this is the second point we are seeing here. Understand? It has not gone beyond these 2 points that we are seeing like this. This is just the whole move based on what we are seeing on daily time frame. Understand? But let's look at it on the lower time frame to know which direction we're going to go. Okay, so based on what we're seeing on this daily time frame, yes, I'm expecting a push back to the upside on this instrument. As far as prices are able to break below this point successfully. So yes, on USD JPY, I'm expecting price to be bullish. So it can just come back into this zone, then reversal back to the upside. But the very moment it's able to break this zone below, price can go bearish. So that's that on USD JPY. Okay, so all right, so let's look at DE40. Yes, let's look at DE40. Let's look at DE40. I've not checked that particular instrument. So DE40, we're on it. DE40. Now DE40 is the German stocks. Okay, is the German stock instrument, and one of the things that affects German stock are information on euros and the likes. Okay, so let's look at what the market is doing on long time. Let's see what it has been doing. So on a long time, yes, price has actually been going up on DE40, but at this moment, it's giving us that push that is like price wants to drop. But if you look at it on the daily time frame, it gapped up a little, and yes, it's more or less like price has even covered for that. Yes, price, okay, price should have covered for that. This is on daily time frame. Let's put it on my 1 hour. So Okay, so yes, that sometimes back last week and price has covered for it. Now, since price has paid back all this, so this is one of the things we need to understand. This particular section we're seeing here is a zone for this instrument. There's a zone around this point. So if price is able to break below this part, then you can expect price to push back down. But if that does not happen, you can have price moving back to the upside. You understand? So around this point is a strong zone for us. Let's look at it. Price could break below this point, but as far as price does not break below this point, around this point, price could get rejected back to the upside. So we should expect a bullish move on this particular instrument from this zone, from this zone. Okay, so right, it's just 8:57, and we have 2 minutes and some seconds more. So I'll give us the opportunity of just one instrument, please. Anybody, one more instrument. You have any instrument you want us to look at? Just drop it at the chat section and I look at it. Just one. One more. I'm with us. One more instrument. We look at it, then we'll call it a day or we'll call it a morning. Yes, let's do it that way. We'll call it a morning. All right, so I have that instrument being dropped. Which instrument is that? I'm with us, please. One instrument is what I'm expecting. Okay, I'm yet to get that instrument. Please. Where? All right, so this person is saying we should have a recap on gold. Okay, no problem. I'll do that. Let's do that. A recap on gold. Let's go to gold. Let's have a recap on gold. No problem. Let's have a recap on gold. So, come in. So, looking at gold, just from what we're seeing, we discovered that price of gold has actually gone up. In fact, this is on 15 minutes time frame, right? Let's look at it on the higher time frame and see what price of gold has actually done. Look at it has gone up, and based on what we are seeing, even on the weekly time frame, it's still giving us that pull. That price is still going up. Even the daily time frame is still up, right? But currently, we're going to be having a pullback based on where price is. We're going to be having a pullback based on where price is currently. Yes, I'm still expecting it to go up, but we're having a pullback. Yes. So once price is able to pull back and gets rejected, I think from around this point, yes, we should have that continuation in that bullish move based on what we are saying. We should have, so yes, can you see? So I'm expecting price to just pull back down to around this point. So this point is the strong zone. If price is able to break below this point, then we will have price still pushing back down. But if price is not able to break below this particular section and it continues, yes, price is pushing up. And just like I've emphasized, I'm emphasizing that the price of gold gets to 4,000. I'm emphasizing it gets to 4,000. That's my take. Okay, so that will be all for today. Thank you very much for joining this morning's market review. Do have a lovely day ahead. Bye for now.